Hello friends, welcome to the accountancy lessons. Now today we'll discuss about the modern approach to accounts. In the last lesson we discussed about the traditional aspects of the accountancy which involved basically two types of accounts, personal accounts and impersonal accounts. Impersonal accounts being further categorized into real accounts and nominal accounts, accounts comprising of assets and nominal accounts comprising of revenues and expenses. Now, modern approach to accounts basically involves the five types of accounts. Assets, liability, revenue, expenses, and capital. Now, we have earlier in traditional aspects of accounts discussed about these terms in brief. In order to get in-depth explanation of these terms, please refer to the Rules of Debit and Credit Part 1 video. Now, the rules according to the modern approach to accounts is increase in assets are debited and decrease in assets are credited. Now, increase in assets are debited and decrease in assets are credited. The reason for it is linked with the traditional aspects of accounts, that debit what comes in and credit what goes out. Plus, that the fact that assets are the rights exercised by the business over its property, over its stocks. Now, let's take an example to illustrate it. For example, I have purchased furniture through cash, rupees 5,000. I have purchased furniture through cash, rupees 5,000. Now, in this journal entry, we are basically involved with two kinds of assets. One is furniture and the other one is cash. Now, as per the traditional aspect of accounts, which links directly with the modern approach to accounts, it is the furniture which is coming in. So, it is the furniture which shall be debited. So, furniture incoming, furniture account debited, to what is being incurred, what is the thing which is going out, cash. So cash will be credited with the words to cash account. So furniture account debited to cash account will be the journal entry which further satisfies the condition that assets increased are debited and decreases are credited. The linking up of traditional aspects of accounts with modern approach to accounts is also involved in the rules related to liability. That is, increase in liability is credited and decrease in liability is debited. Due to the fact that liabilities are the financial obligation of our business towards your business, your people, that is, my business towards other people, towards other firms. For example, I have borrowed rupees 5,000 from Mr. X. What will be the entry for this? Cash account debited with 5,000 rupees to loan from X account with a like amount. Now why? Because cash is coming inside the business, and as per the assets rule, that increase in assets are debited, cash account will be debited. So cash account is debited with the like amount of rupees 5,000, and loan from X account is credited because it is the financial obligation of my business towards X. That is, I am liable to pay rupees 5,000 to X. That is, I have taken cash from X worth rupees 5,000 on a credit basis. That is, I will repay him 5,000 rupees back in future. So loan from X account is being credited, satisfying the rule, that is increase in liability is credited. Now let's talk the other way around, that is decrease in liabilities are debited. Now I have taken a loan from Mr. X worth rupees 5,000. I have promised him to pay rupees 5,000 say 5 days from now. That is, I will pay him rupees 5,000 after 5 days. Now after 5 days, the question will be repaid X back rupees 5,000 of loan. The entry to it will be loan from X account debit to cash account. Now the cash account will be credited because the cash balance is being deducted from the business, and as per the assets rule, decrease in assets are credited, cash account is likewise credited, but loan from X account is debited because decrease in liabilities are debited. That is, now I have repaid him back rupees 5,000 and there is no liability left which is to be payable to X. That is, now the liability is being cancelled, the amount is being paid. So the loan which I had taken from X has been paid back. So the loan from X which was credited in the earlier transaction, which was borrowed from X rupees 5,000, should be debited because I have repaid X back rupees 5,000 worth of loan. So loan from X account is being debited to cancel out the liability, thus satisfying the condition decrease in liability is debited. यानी कि जब हम किसी से लोन लेते हैं तब हमारी ऑब्लिगेशन होती है कि हमने उसको अमाउंट पे करना होता है, दैट इज वी हैव टू मेक द अमाउंट पेबल टू समवन एल्स. दैट्स व्हाई ड्यूरिंग द टाइम ऑफ टेकिंग द लोन द एंट्री इज कैश अकाउंट डेबिट टू लोन फ्रॉम एक्स. उस टाइम लोन फ्रॉम एक्स क्रेडिटेड होता है क्योंकि उस टाइम हमने उससे लोन लिया होता है ऑन क्रेडिट बेसिस, हम उसको बाद में पे करेंगे. तो जब हमने उनसे प्रॉमिस किया होता है कि हम आपको इतना कैश हम आपसे ले रहे हैं, हम आपको बाद में पे कर देंगे, उस टाइम लोन फ्रॉम एक्स यानी कि जिससे भी हमने लोन लिया है उस ऑर्गेनाइजेशन का अकाउंट क्रेडिट होगा. लेकिन जब हम उसको रीपे कर देंगे अमाउंट जितना कि हमने उनसे लोन लिया था, तब उनका अकाउंट क्रेडिट हो जाएगा क्योंकि अब हमारे पास उनको देने के लिए पैसे नहीं रहे. यानी कि अब हमने उनका सारा अकाउंट जितना भी उनका था क्लियर कर दिया है, हमने उनको पैसे रीपे कर दिए हैं. दैट्स व्हाई लोन फ्रॉम एक्स अकाउंट विल बी डेबिटेड, दैट इज दिस क्रेडिट बैलेंस विल बी कैंसल्ड. Thus increase in liability is credited and decrease in liability is debited. Now about capital account. Capital account involves a basic accounting principle known as the business entity concept. According to the business entity concept, business and the owner of the business are considered as separate entities. That is, owners are considered as the creators of the business, and the transactions are recorded not from the owner's point of view but from the business point of view. इसके हिसाब से कैपिटल का हमेशा क्रेडिट बैलेंस होता है, और जब भी हमारा कैपिटल इंक्रीज होता है तो उसको हमेशा क्रेडिट किया जाता है, और जब हमारा कैपिटल डिक्रीज होता है तो हम उसको हमेशा क्रेडिट डेबिट करते हैं. सो इंक्रीज इन कैपिटल इज क्रेडिटेड एंड डिक्रीज इन कैपिटल इज डेबिटेड. अब डिक्रीज इन कैपिटल हो सकता है ड्यू टू ड्रॉइंग्स, और इंक्रीज इन कैपिटल हो सकता है जैसे कि हमने इन्वेस्ट किया पैसा बिजनेस में, तो दैट विल बी कॉल्ड एज इंक्रीज इन कैपिटल विच इज ऑलवेज क्रेडिटेड. अब जैसे कि एग्जांपल लेते हैं, एस स्टार्टेड बिजनेस विद ₹1,00,000. एस ने 1,00,000 रुपए से बिजनेस स्टार्ट किया, तो इसकी एंट्री होगी कैश अकाउंट डेबिटेड 1,00,000 टू कैपिटल अकाउंट क्रेडिटेड विद द सेम अमाउंट. अब इसका रीजन क्या होगा? Cash account is debited because according to the assets rule of modern approach to accounting, increase in assets are debited. So cash is coming in the business, so cash account is debited. But capital account is credited because owners are considered as the creditors of the business, and the amount of money which is invested by S in the business shall be returned to him by the business once S shuts down the operations. यानी कि जब एस इस बिजनेस को क्लोज करना चाहेगा, या जब भी एस इस बिजनेस को क्लोज करेगा, तो बिजनेस को कम से कम एस को 1,00,000 रुपए लौटाना पड़ेगा, बिकॉज उसने एटलीस्ट 1,00,000 रुपीज एज अ स्टार्टिंग कैपिटल इन्वेस्ट किया बिजनेस में. सो दिस 1,00,000 रुपीज इज द लायबिलिटी ऑफ द बिजनेस टुवर्ड्स एस. दैट इज एस इज द क्रेडिटर of the business, as S is the creditor of the business, and business is liable to pay him back ₹1,00,000 once he shuts down the operations. So this was the capital account. Now let's combine the revenue and expenses operations. Increase in revenue is always credited and decrease is always debited. Alike, expenses in which increase is debited and decrease is credited. So increase in revenue is credited and decrease in revenue is debited, and increase in expenses is debited and decrease in expenses is credited. Now the simple reason to it is that capital has always a credit balance due to the business entity concept, and you might have heard about the accounting equation. Assets is equals to liabilities plus capital, in which capital represents owner's equity. That is owner's funding. Owner's equity means owner's funding, that this owner has himself invested without taking loan from outside. The loan which is taken from outside and invested in the business is covered under liability. So capital is himself invested by the proprietor in the business and has a credit balance. तो अगर हमारे पास रेवेन्यू जनरेट होगा, रेवेन्यू का मतलब क्या हुआ कि हमारे पास जैसे अगर इनकम या प्रॉफिट जनरेट हुआ, तो दैट विल ऐड मोर टू द कैपिटल, दैट इज इट विल ऐड मोर टू द क्रेडिट side of the business, it will add more to the credit owner's equity of the business. Thus increase in revenue is credited and decrease in revenue will be debited. And expenses differently from revenue or in opposition to revenue has इंक्रीज इन डेबिट बिकॉज अगर हमारे पास एक्सपेंस होगा, हम खर्चे करेंगे, जैसे कि सैलरी देंगे ऑफिस स्टाफ को, वर्कर्स को हम वेजेस देंगे, लैंडलॉर्ड को रेंट देंगे, तो हमारी कैपिटल डिक्रीज करेगी और कैपिटल की हम हमेशा क्रेडिट बैलेंस होती है। तो जैसे कि हमारे पास हमने 1 लाख से बिजनेस स्टार्ट करा और हमने जैसे कि एक्सपेंसेस करे वर्थ 20,000, तो हमारे पास एक्सपेंसेस करने के बाद 80,000 रुपीज बचे। सो 1 लाख हमारा जो क्रेडिट बैलेंस है कैपिटल का, उससे अगर हम 20,000 कैंसिल करें, सो दैट 20,000 विल बी ऑफ डेबिट बैलेंस। सो we have left with the credit capital balance of worth rupees 80,000. So increase in expenses, that is when we have more expenditures, that is when we spend more in petty expenses like salary, rent, legal expense, wages, etc. We have debit, and when there is decrease in expenses, we will have credit balance. That is, it will add more to the capital. Decrease in expense will add to the capital, and increase in expense will deduct more from the capital. So in order to cancel the capital balance, we'll have in debit balance of expense. So the opposition of the opposite effect of revenue and expenses are being explained to you, and I hope that you might have understood about the 5 different classification of modern approach to accounts. Thank you.